There are 6 types of investors on Wall Street, and statistically, you are one of them. One of them will make you rich. 4 of them will make you broke. And 1 of them will make you a menace at Thanksgiving dinner. By the end of this video, you'll know exactly which one you are, and more importantly, which one is quietly draining your bank account. Let's start with the one every finance bro pretends to be, but almost nobody actually has the patience for. Type 1. The value investor. You'll recognize him by the beige sweater vest, the lukewarm black coffee, and the annual shareholder letter he's read 4 times. He can explain discounted cash flow for 11 minutes without taking a breath. Ask him how his year is going, and he'll say something like, "I don't measure success in quarters." Translated from finance speak, that means his portfolio has been flat. Since a president most of his followers can't name, he'll spend 300 hours reading a single company's annual filing before buying a single share. He's not boring, he'll tell you. He's disciplined, which is what boring people call themselves. Here's the twist though. Over long enough time, this is historically one of the only strategies that has actually worked, which is exactly why nobody wants to do it. Patience doesn't trend on social media. Now let's meet type 2, the guy who thinks investing is something you do between sets at the gym. His portfolio is 2 meme stocks, a sports betting app, and a course he bought at 2 a.m. from someone with a Lamborghini rental. His morning routine is a cold shower, a motivational podcast, and 45 minutes of what he calls manifesting gains. Ask him his investing strategy and he won't mention a single ticker. He'll just say, "The best investment is myself." He calls himself an entrepreneur, but his actual revenue streams are a dropshipping store, a referral link, and charging his roommates for financial coaching. Bottom line, he's not trying to beat the market. He's trying to beat his own credit card statement. Moving on to type 3, the one who thinks a stock chart is basically a religious text. He's got 6 monitors, 3 energy drinks, and a theory about why Tuesday afternoons are historically bullish. To him, every candlestick tells a story. He just conveniently never mentions what the company actually does. He doesn't research fundamentals. He says those are for people who are, quote, stuck in 2005. He'll show you a pattern shaped like a rabbit doing a backflip and swear it. Predicts next week's price. Just don't criticize his charts. To him, that's not analysis, that's art, and you don't critique the artist mid-brushstroke. Now type 4, and this one has genuinely lost money in 3 different ways nobody thought were possible. He turned $500 into $11,000, then watched it go back to 0 in a single weekend. He doesn't call it a rug pull. He calls it a valuable lesson in decentralized finance. Now he owns 14 JPEGs of cartoon animals, insists on living completely off-grid, and swears that regular money is a scam, which is a bold stance for someone who still uses his mother's grocery delivery app to eat. He hasn't filed a tax return in years because, in his words, the blockchain doesn't recognize borders, and he spends about 8 hours a day in online voice chats explaining the future of finance to people half his age. If you zoom out, here's the pattern so far, 3 types down, and confidence has had nothing to do with actual results. Quick pause before we get to the last 2, because trust me, they're the most dangerous ones on this list. Sponsor break a pause, insert bead here. Alright, back to the chaos. Type 5 is the one that turned a video game store into a personality trait. He drinks energy drinks for breakfast, refreshes his portfolio app 400 times a day, and hasn't seen actual sunlight since a certain stock. Squeeze in early 2021. He thinks a 40% drop isn't a loss, it's a consolidation, and he calls every bad trade a battle scar. Ask him about retirement accounts and he'll look at you like you just spoke a foreign language. His entire plan for generational wealth is going all in on short-term options and blaming manipulation when they expire worthless. He doesn't read earnings reports. He doesn't study charts either. He just feels the trade, and somehow that's the whole plan. And finally, type 6, the one who has been personally offended by the stock market since a movie he watched about the 2008 crash. He hasn't blinked since watching that movie. He now lives in spreadsheets. He calls every single asset a bubble, including several things that literally cannot be bought or sold. He's been predicting a total collapse for 141 consecutive months, and he is still extremely confident about month 142. His answer is always the same. One day, the market will crash, and one day, you'll all see. He's not really rooting for a soft landing. Some small part of him wants the whole thing to burn, just so he can say he called it. Until that day comes, he's stockpiling canned food, bottled water, and printouts of earnings reports from over a decade ago. So 6 types. 6 wildly different personalities. And somehow, one identical universal truth connects all of them. None of them actually know what's going to happen next. Not the guy in khakis, not the guy in his mom's basement, and definitely not the guy stockpiling canned beans. They're all just placing bets with different levels of confidence and completely different vocabularies. So here's the actual question worth asking yourself. Which one of these 6 sounded a little too familiar just now? And more importantly, is that actually working for you? Or is it just the personality type that's the most fun to talk about at a party? If any of these 6 hit a little too close to home, subscribe, because next video, we're breaking down which one of these types actually wins over 10 years, and it might not be the one you're rooting for.